Hello everyone, my name is Daniel. Today I wanted to look at Renewi. Renewi is an interesting company in my opinion, and today we're going to look at what does Renewi actually do, what are its plans, what are its fundamentals, how does management look, and put a number on all these things to a discounted cash flow model and actually valuing these shares and figuring out what would we pay today for these shares, or what should we pay based on some expectations I made. So let's just start. Let's kick it off with what does Renewi actually do. Renewi is a company in the waste management sector. It collects, sorts, and processes waste, be that residential, commercial, other kinds of waste. They operate mainly in Europe, but also have very small operations or indirect operations in Canada, but they're focused on the UK and Belgium and Netherlands. That's where their main operations are. That is mostly commercial waste. That is collection, sorting, and processing of waste. That's what this segment does. They collect that mostly in the UK and Netherlands and Belgium, where they are one of the leaders in recycling as well. They also have some other segments for making soil, sludge, water, among other waste, special wastes back into usable materials for mostly construction. And in general, these are very small revenue contributors, the other two, but mainly Renewi focuses on commercial waste. And they have a specialty division which processes specialty wastes, electrical, residual municipal waste, glass, among some other things which aren't in this list. So in general, this is a fairly simple business model. They collect waste, sort it, process it in their recycling plants, and sell the raw materials that result from that. So how has that been doing actually? Well, Renewi merged with Van Gansewinkel BV and another company from the UK merged in 2017, if I remember correctly, and that created Renewi. Before that, those were two separate companies, and this is how Renewi has performed the last couple of years. They have a broken book here, so full year 2021 isn't until December 2021, but until May 2021. So keep that in mind. But it's from the latest annual report to just give a glance at how they have been performing. Renew is a highly leveraged company. Their leverage ratio, as defined by IFRS, is significant, to say the least. Their debt is also almost as big as their entire market cap, but they have been reducing that recently, especially last year, but they're continuing in that path. That would be a concern just from a quick glance. Revenues have been increasing during COVID. It has flatlined a bit, but margins also dropped during COVID, or EBIT margins at least. COVID has hit Renewi quite hard as raw material prices dropped and other costs increased. So that's what put a dent in all these things. They expect COVID quite big of a COVID recovery to come up as margins should improve, and we'll see if that actually happens, as they have their profitability has remained decent. They have been paying down debt, reducing leverage, so a bit of standing still in that regard, but that we would expect that this improves over time, especially as COVID ends or diminishes in significance for Renewi at some point, impact-wise, and this should also lead to increased margins and better returns on capital, which they have kept quite steady even during COVID, and they expect to actually fuel that recovery and growth through a number of of projects, also some merger and acquisitions. They made a special team to analyze potential merger and acquisition targets, but we'll have to see if anything comes out of that. As Renewi is one of the smaller players, we also have Suez environments that is one, or Veolia environments in Europe, which are two other bigger players. But Renewi is an interesting, almost pure play recyclable company, and they have quite some new projects coming up. We'll see how these pan out, as it's difficult to say beforehand, of course, but in general they're moving more into recycling plastics and other things that are difficult to recycle, and acquisitions could bolster up their scalability benefits, but their skill benefits, but we'll have to see. They haven't announced anything yet in that regard, only that they were looking more at acquisitions. So let's actually look at management, how management has been looking at that. Otto de Bont is the current CEO of Renewi, and he has focused on setting some goals, mostly related to recycling, and that's the main selling point of this company, that they can get their recycling rate up, so they get better margins, better overall profits, and if they actually could get those margins up to 75, or the recycling rate up to 75% in a meaningful amount of time, that would bring significant benefits, as they would get more raw materials out of their waste, and that without too much additional cost, that would improve margins significantly. But we'll see if that actually happens. They're working towards it, and the recycling rate has been increasing over the last couple of years, so they have proven that this is feasible. Also, with all these new projects that are listed here, those work towards achieving that 75% recyclability rate. They have also been has focused on lobbying for favorable recycling regulations in Europe, as multiple countries are looking at actually getting to the Paris Accord targets, and for that to happen, recycling is a significant part in reducing emissions. So Renewi wants to benefit of that as much as it can by lobbying for that to be more of a priority, but also to get more favorable regulation among taxes related to renewable resources. And in that regard, they want to grow the total addressable market that they're in, so to speak. They also want to expand to other European countries, or expand their operations at least in the countries where they already are, as in the UK and Netherlands and Belgium. They do not have that much room to grow anymore without acquiring like Suez or other companies. So in that regard, they would really have to look at how to expand organically in other countries, as they're a bit of a newcomer. That could be a significant risk, but Otto has believed in that, so we'll have to see. Toby Woolrich is the CFO of Renewi. He has really focused on debt reduction, cost savings, as a CFO should, and lower leverage brings a bit more peace of mind regarding this company, but it's still highly leveraged, and as long as they don't bring it down to a more reasonable level, would still be very wary of any acquisitions by this company, as that I don't think that would be I would rather see this company deleverage a bit, as that has hit them in the last couple of years. But we'll have to see if they see attractive opportunities, then they will most likely take them. So how do we put this into numbers? As I really like discounted cash flow models, as you have seen. I will actually go to the spreadsheet. This is the spreadsheet I have for doing analysis DCF-wise. So I took past numbers, or 2021. These are broken book year numbers, so not actually until December 2021, but This is until May 2021, and these are all in gray. These are all my expectations and assumptions in this model. And based on this, I put this into my DCF model, and I get an internal rate of return. So let's walk through this. I looked at past data from Renewi post merger with Van Gansewinkel, and these are the results in euro converted by today's euro pound ratio. So perhaps not as entirely accurate, but these are as reported by the company. Only this one is converted to euros manually. And we have seen that the revenue is basically flat, perhaps even declining a bit if you take in 2021 into account, but the management has indicated that this should be a one-off and that they expect it to increase again. We'll see. In my model, I've remained fairly conservative with it growing only 3% and 2% per year over the next couple years revenue, so it would only recover to pre-pandemic levels by 2023. That is quite a conservative assumption, but in this model, I'm quite conservative in that regard. EBITDA would grow a bit more, as I would expect 12% EBITDA margin. This is based on the continuously growing EBITDA margins. EBIT margins have also been increasing pre-COVID at least, so I would expect that to increase as well. With all these new projects and a higher recyclability rate, I would expect these margins that I put here to be reasonable. That is an assumption, so based on the assumption that the EBITDA margin remains at 12% or increases slowly to 13%, as I've done here, with slow revenue growth and a decent capture of EBIT to EBITDA, you would get these numbers. The EBIT margin slowly increasing to 6% from the 5%. This might be a bit more aggressive, but with only 2% revenue growth, which actually is expected to be higher by management, but I remain a bit more confident in their margin expansion instead of the revenue growth, as I would see them get more scale benefits, but expanding more than just increasing. Then organically, I would not see that, and also don't really take that into account in this model. But based on these numbers and these assumptions, I would get to an internal rate of return of about 11.5% for a Renewi share, taking into account the debt per share. There's significant net debt per share, so I subtract that from my net present value, and this would leave me with an internal rate of return around 11.5%. So buying Renewi at its current price, we would expect to make 11.5% yearly. Based on these numbers, 1.5% revenue growth for perpetuity, 2% from 2024 to 2026, and 3% revenue growth from yearly from 2022 and 2023. But decent margins expansion. I don't think this is an unrealistically conservative model, but based on this scenario, which I think is quite feasible, as I do not have the highest expectations growth-wise of Renewi, I would expect this to be a very attractive share at its current price, at least. And with the recent market drop, today is 24th of January, so markets have been declining last couple of weeks. So luckily we can get decent prices for example, Renewi. I might be doing some more analysis in the future, but Renewi seems attractive at its current price, and using these numbers, I get to a fairly attractive IRR. So do with that what you will, and let me know if you have any questions or if you have any ideas, and then I'll see you next time.